Hello everyone. Welcome to Ayurveda Learning Hub. I hope you did press the like button for previous video. Do like this one, and I hope you have already subscribed to our channel, the Ayurveda Learning Hub. And today you have switched on your notifications for further updates from us on various topics like stocks, mutual funds, etc. So yeah, I'll be defining more and more for you. Now, as last time we did various types of stocks, we finished with penny stocks, the defensive stocks, and everything. Today we'll begin how to analyze these stocks. Now, a very easy method of analyzing them is through internet, but I'll be explaining it pointwise to you or what our factors are to be kept in mind. But again, I'll say the conservative method newspaper is very important as you get to read about opinions of various CAs, various big sharks in it, various economists, various specialists in it. You get to analyze the graphs. These graphs are, they are not altered, they are not preferred, they are not adjusted according to someone's preference. So you can always look at them and decide. Next is your magazines. They are again a source like newspapers, but the most important source these days is the internet. So internet is again important, and yes, the various websites I'll tell you, Money Control, Grow, Upstocks, everybody has their website. You can analyze for them. I still personally find Money Control as the best one. So I'll tell you of a few things which you need to look for while deciding if this company's stocks are worth buying or are not worth buying. So there's a 52-week low price. So how low has the stock been in last 52 weeks or the past 1 year? So whatever be the lowest value of the stock in this 1 year, it will display that thing there, and it is called a 52-week low. Similarly, there's a 52-week high. It refers to what is the highest price of one share during past 52 weeks. It can be anything. It can be, the difference sometimes is huge. It can be up to 20,000. 20,000 is very great. Let me tell you, 200 rupees, 500 rupees, sometimes up to 800 also per stock. So this lowest price and highest price analysis is important because you need to decide how low has the stock went throughout the year. 52 weeks is a year, I hope you know, right? And the highest price, whatever has been in the year, and you decide. So the company's name is always mentioned, which is the important thing because you are at a time analyzing a particular company. Next is the number of shares traded during a particular day. This helps you realize the demand of the share now, today, right now. What amount of shares are being sold or bought by people right now describes its demand in the economy. If nobody is demanding the share or buying or selling the share, there's no demand in the economy. So now even if you buy it, you can't sell it to anyone, right? There's no one who's buying the share of yours. So there'll be trouble for you. You can't sell off the share. There'll be no liquidity. So this is what you need to analyze. Now there is YTD percentage change, which reflects the stock price change for the calendar year as per dates. Now how much or till as what percentage increase has been seen in the price of the stock throughout the year, that is represented in YTD percentage. YTD is nothing, the yield change percentage. So next is the yield percentage or the percentage of return based on the dividend and the current price of the stock. So if somebody buys the current price and what is the estimated receipt or gains in the stock which are going to happen in near future, this yield percentage is calculated as per it, and it also has a small factor of dividend expected from the company, and thus they calculate your what is the expected return. Or if you are analyzing after buying a stock, then it shows at what price had you bought the stock, at what price. Supposedly you bought stocks from Grow as a broker, and now you are analyzing it using the medium of Grow only. So it will tell you at what price you bought, what dividend has the company promised, how much the price has increased, so what is your total gain right now. Next is your price earnings. Yes, if you have already bought the stock, it will be displayed that at what price did you buy and what price it is right now. So what will be the price you are gaining. Now there is projected annual dividend for the next year based on the amount of the firm's last dividend. So again, this is the estimate dividend. It is an analysis depending upon the last dividend given by the company. This is analyzed by the company itself. There are people sitting behind there, experts who are analyzing this on the basis of graphs of the company over the years. So they analyze this. Now there's another thing called price paid. Now if you have already bought the stock and you are looking it on your broker's site, it is displayed that at what price did you buy the stock. Next is your volume. It's represented in 100. It means the number of shares being traded right now. So at this very moment, the number of shares being traded is displayed. Now there is this net change. It's the difference between price you paid for buying the stock and the last share traded, the price of last share traded. So it keeps increasing and decreasing every minute when the market is live. So it is the net price change, which you can analyze at what price did you buy and what price is going right now. So sometimes it displayed as minus 0.1 plus 2.36. So the price has increased by 2 rupees 36 paise, or it has decreased by 1 paise or 0.01 paise as per what you bought. So there are different parameters on which basis on which you can analyze your stock and how are you going to sell or buy it, or when is it safe enough for you to buy or sell it, and how can you, when you need to decide that preferred moment, that preferred day in the market, that preferred art, because in the same day you see sometimes a 20 rupee variation in the stock. So supposedly when the market opened, it went up, people kept buying it, then 15 minutes is for the big sharks, then comes the next minutes, and then small capital people also kept buying it. The stock grew, it has a highest value, and when you open it after 12 o'clock or 1 o'clock, you see the stock has fallen by 20 rupees or 25 rupees. Now you feel you can't sell it today. So that particular right moment is to be looked for before selling the stock to make better gains and accurate gains. So I hope you did like this video. I told you how to analyze your stock on the broker's site, on the extra sites. So press the like button for the video, do subscribe to our channel, and stay connected for further updates. The stock topic has a bit more to it. It's the mathematical part, the calculation part of the profits, the current yield, total return, and everything. I'll explain it to you in very brief. Then we end with this stock series, the stock playlists, and we will begin with our new playlist, mutual funds. So stay connected and do subscribe to our channel, the AccuWeather Learning Hub. Thank you.